Escalating trade tensions between the US and China boost demand for the US dollar. The Canadian dollar has incurred losses from falling oil prices and comments of the Bank of Canada top official who signaled a possible rate cut. The loonie could extend a decline due to the broad-based strength of the greenback and growing risk of sentiment. The markets are about to start correction because too optimistic expectations for a trade deal rest on pure speculation. Washington threatened to raise tariffs on China's imports. Besides, the US Senate passed the bill in support of pro-democracy protesters in Hong Kong. In response, Beijing condemned the US interference. Such developments worsened the US-China relations, thus dampening appetite for risk. Meanwhile, the US dollar and the yen are winning favor with investors. The US dollar opened the US trade with an advance climbing over 98. The greenback lacks confidence against the yen because the clashes in Hong Kong could complicate for the negotiating parties to reach a trade deal. In this context, the dollar-yen pair could slip to 108.24, the lowest level of the last week. Today, the market is focused on the release of the Fed's minutes from October. The document will determine a further trajectory of the US dollar. Traders will be looking for insights into the reasons behind another rate cut last month. Today, the Canadian dollar is trading at near 5-week lows against its American rival. The loonie slumped following remarks of Senior Deputy Governor Carolyn Wilkins. She said that the global economy is facing immense challenges that could spill over into Canada. Since yesterday, the US dollar versus the Canadian dollar pair jumped over 100 pips above the level of 1.33, with prospects for a further climb. As a commodity currency, the loonie has been weighed down by falling oil prices. Market participants voiced concerns over excess crude supply amid soft demand. Today, traders are anticipating a weekly update on the US oil inventories and a consumer price index from Canada. In fact, consumer inflation in October matched economists' estimates both month-on-month and in annual terms. The Bank of Canada still has some room for trimming the overnight target rate from the current level of 1.75%. Canada's economy could be hurt by prolonged trade uncertainty, so the central bank officials are ready for urgent measures. The Bank of Canada is holding the next policy meeting on December the 4th. That's all for today. Thank you for watching and see you back tomorrow.